I'm too busy writing to find my soul caught up in someone's wahala. I see man them blowing on Twitter and it's making me bitter while knowing I'm better. Preferring to call themselves artists and rappers, cause rappers are only just niggas. I kick on the first, the stereo, the two and the four might get the boy triggered. From young I had to work double and harder, hoping that I would go further. I seen what it done to my mother and father who hustle to give me a future. That's why I need me a Grammy while brothers be acting, give them an Oscar. African just like Drogba, pounded yammer, stew with the okra. Grandma prays a lot for me, praying I prosper.
Okay, welcome back, guys. Welcome back to another video. So today in this video I'm going to be talking about the trades that we took for this week and the past week, for just the trades for the last 2 weeks, and I'll be explaining how I got my entry, what I saw, how I saw the trades, and things like that, how the trade played out. So I'm going to be starting the video with this trade on BTC. This was the first trade I took last week. Last week, and how I marked up my chart. So like we all know, first things first, we mark out our highs. This is the high level, and this is the low of this high. This is the low of this high. This low is the low of this high. So but one thing that's clear in the charts is that this level got broken. This low right here, and also this low right here, and like I've always talked about in this channel, it's better to take the lower break if you see the opportunity. So on Monday when the market opened, this is was on Monday, you can see that price is already inside the lower break. So we just mark out the charts from there. We don't mark out from the top of the wick. We start our markings from the body of the candle and include some of the wicks. So it's really up to you if you want to mark out the whole wick. But I actually mark my charts from the top of from the body of the candle, from just the connection of the wick and the body, just that little area. So yeah, that's it. And also for the supports, or for the resistance. So we know that if price goes above this level right here, if price goes above this level, you know that this trade is no longer valid. So yeah, so on Monday I was in the market looking for a short position. So yeah, BTC fell a lot, but yeah, I'm just going to explain this trade entry and yeah, go on to that one. So as you can see in the market on the 15-minute time frame, you can see that price was developing nicely. High, higher low, high, higher low, high, higher low. And then we can see that at this point in the market, this higher low got broken. This higher low got broken, and a lower low was formed. So from here in the market, you can take this retracement, putting our stop loss either above that level or above the general high. But if I'm to take this trade, I'm going to put my stop loss above this high here and target this level right here. I mean, yeah. So this trade is the 1:5 trade, but if this trade was the 1:5 trade, I'm just going to likely put my stop loss above this high right here, because there's no reason to shrink your stop loss, or because we know we're going to have a good move anyway. So the move is enough for 1:3, which is my standard risk to reward, and yeah, at that point just put your stop loss at that high. But if you really want all the maximum risk to reward, you can put your stop loss above the recent high. So as you can see, we got stopped out on the next day. I think this was on Monday. Okay, yeah, we got stopped out on Tuesday, and yeah, that was very unfortunate. But yeah, we know that sometimes we get stopped out. But even though we got stopped out from this trade, we know that this trade is not like invalid, right? It's not invalid yet. At this point in the market, we can see that price made a very, very huge retracement on the 1 hour time frame. We can see that price made a very, very sharp retracement in the 1 hour time frame, and that's just telling you that price does not want to go above. So price was trying to break above this level, but price failed to break above this level, and price didn't only fail, price rejected very, very badly. Like you can just take this as like a liquidity sweep. But if you don't use liquidity sweep, you can just use that as a normal rejection. As you can see, we can also have another re-entry here. Go to the charts. Okay, so we can also have another re-entry here when price was breaking this structure right here, putting our stop loss under either under this level or like half of this whole level. Like I always use, if there is no close high to use as a stop loss, you can also use half of the whole or the whole stop loss level. Okay, then using the half of the level, or using half of the whole stop loss level, we can be in this trade for 1:3. So price did indeed stop me out with this candle, and I entered immediately after I saw that rejection candle somewhere here, and going for 1:4, towards this low, towards this low, these lows right here. Yeah, towards this low right here, and yeah, it was a good and beautiful trade, clean 1:4, and yeah, obviously the market kept falling from there, but yeah, this is just in hindsight. But yeah, the main trade that we were meant to take was this trade right here, from this level right here down to this level. That was our trade. So going on to the next trade for that week, the next trade I took was on gold. So on gold we have almost the same setup. We can see that price had a kind of a support level here or resistance level here, and we also know that if we draw our chart from the wick and the body, this is our supply level, drawing our chart like this. And now what we see price up below this level on the 1 hour time frame. So we go to the 15-minute time frame on the 26th of May. 15, and we can see that price did indeed give us set up an entry. We can see that price tracking the highs and the lows. We can see that price gave us this break of this level and the retracement towards this level right here. So price made a high. Price broke this low right here. After making a high, broke this low, and price retraced into this level, and yeah, that this retracement was our entry. You can enter anywhere that you see fit for this whole setup, and the stop loss will likely be either this high or these highs right here. You can use any of them, because in this case we have a high present. We have a high that we have highs or lows around to use as a stop loss level, unlike the last trade in which the stop loss was meant to be very, very huge because of that huge retracement or liquidity grab that happened in the market. So this trade targeting this high, that's the first level of sellers. If you go to the 2-hour time frame, so going to the 2-hour time frame, we see that this level is the first level of sellers in the market, and we first of all we target that, and then we go on to the next level of sellers, the market. As you remember in the first video I made, or in previous videos, the level of buyers are the level where price bought from the past. So we can see that in the past, price bought from here, the market, price also bought from here, and price also bought from here, these levels here, these levels. So this can be a kind of a take profit level for us, and as you can see, price took out at least 2 of those levels, giving us clean 1:2 trade. So yeah, that was the trade idea for that trade, which this trade gave me a 2% increase in my account, and the last trade, BTC trade, which BTC gave me a 4% profit in my account. And then this new week was, and I'm going to show you my trades for this week, being the first week of June. I've gotten 3 trades so far. One on US30, basically these pairs right here. One on US30, one on gold, and one on Euro USD. So yeah, let's get to it. So, like I said in the last video, this indicator, MTF BOS, is actually is a very, very good indicator for your indications in case you're looking to, in case your indications are a bit messy or price action is not clear for you, you can just use this to clarify, Yeah, so yeah, let's go to the 1 hour time frame. So, at the beginning of this week, let me just show you guys where it's all started for this week on Monday. Yeah. So on Monday, right here, in the 1 hour time frame, two things happened on Monday. Oh, not actually on Monday. So this break of structure right here, let me just clear the chart. This break of structure right here happened last week. So price broke above this level last week, and we're looking for a continuation towards this level. So a continuation like this. So we have our indication, or we have this as our indication, this right here as our indication, and we are looking for a continuation towards this level. But when price came back right here at 8 o'clock, I was not in the market. I think I was going to school, and yeah, I didn't take this trade, and I think it saved me from a stop loss. So, and I also think that there was no actually kind of confirmation on this for that trade. Yeah, if you look at this trade, you know that we only take the trade above this line. I remember, I think when I saw this trade, I was waiting for it to come above this line again, and it never came above this line. So I was like, yeah, this trade is not for me. Then later that same day on Monday, we have this another break of structure towards the downside right here. We can see that price broke structure towards the downside, and that is giving us another indication. So I delete this old one because it's no longer valid, because price has broken the other way around, so price has gone under that structure. So with this structure now, we know that price is going to come from here to here. That's the first thing. With this break of structure right here, we know the price is going to come from here to here, and we also know that we can also target other level of sellers. So we can also target here with this other level of buyers. Sorry, so we can also target here and probably here. So yeah, so let me just show you guys how the trade would have been, or how you're going to find an entry on this trade. So after price has made this move right here and corrected, the next thing we do is to go to the 15-minute time frame and look for entries on the 15-minute time frame. So on the 15-minute time frame, what can we see? We can see that if we at this point, this is where we enter from. We see that this is our indication. Maybe let me just make it clear for you guys. So this is our indication right here. This move right here is our indication, and this whole move right here back into this level is our correction. That's our correction, and I'm not going to mark that. It should just be visible and understandable. Just if you don't understand indication and correction, just go back to my other videos and you will understand it with those videos. So yeah, so now we just focus that we wait for price to show us where price wants to go, or for price to change structure towards the downside again. So at this point in the market, we mark this high. Yes, we mark this low and this high. So this high got broken towards the upside. That means price has not changed structure right yet. Then next thing that happened, price broke this structure right here, broke this low. Price didn't give a continuation for this other one right here. Instead, price broke this low, and we can see that from this low that was broken, price came all the way to our pivot level. I call this our pivot level. So this pivot level is the level where we entered, where we are meant to enter from. But even though price went through or broke through our pivot level, that's not enough confirmation to enter the trade, because we always want a retracement. Now what we see price retracing to our pivot level right here. Now we can execute our trade, putting our stop loss under the most previous high. So where is the most previous high that we have in the market? The most previous high we have is this one, and also this one as well. But yeah, let's say we put our stop loss under that high. and targeting first our first level of indication, second level of indication, and yeah, that's a 1:2. But you guys knowing me, I'm going to use only half. In fact, when I took this trade, I used only half of this level, level right here, because there are three kinds of stop loss I use. I use half of the whole stop loss level, the most recent high, the most recent high I can see in the market. So like if I am meant to end, if I'm in the market at this point and I'm looking for where to put my stop loss, I'm going to put my stop loss under the most recent high, and this is the most recent prominent high in the market at that time. This high right here, this was the most recent high that I found in the market. So, or the third one being the whole entire high, the whole structured high. Depends on how far the structure is. So for this trade, the whole structural high is going to be at that level. But you guys know me, either I put my stop loss above this high, or half of the whole stop loss level. So somewhere here. So yeah, targeting a 1:3, targeting this level right here. Boom. Okay, but also we got stopped out of this trade on the 1 hour time frame. Let's go back to the 1 hour time frame. So we got stopped out on this trade, but yeah, this trade structure was still valid because we didn't put our stop loss on the whole structural high though. The whole big picture, we know that this high is the most prominent high. This high right here is the most prominent high. That is gonna determine if the trade is still valid or not. So even though we got stopped out, the trade is still valid, and yeah, we're gonna take a re-entry, but yeah, let me even check if there's any re-entry to take in the market. Okay, so actually there's no re-entry because I think this is just when the news came in and price started dropping quickly. So yeah, I don't think that there was a re-entry, but if you want to take a risky re-entry without like a change of character, yeah, I think that's also possible because price respected this level. We can see price rejecting here multiple times, and yeah, maybe you can take it somewhere here before the news, or even at the pivot level and putting your stop loss at the structural high, because it still played out well. Like the price just fucking mountain. So let's go to the next thing. Let's go to the next one. The next trade I took. Yeah. Let me just update you guys where I closed this trade. I actually closed this trade at 1:2. Yeah, somewhere here at 1:2. I closed this trade at 1:2 because yeah, I'm going to tell you in a bit. Let me just go and share with you guys my US30 trade, and you're gonna know why I closed that trade at 1:2. So on this US30 trade, let me just break it down for you guys. So I used this level as my I actually took it from the wick. I don't know why I used the wick, but I used the wick this time. So I saw that we had this indication from this level to this level. This is our indication. We all know that this is our indication. This is very, very clear. And then we have a correction towards back into the level from here to here. And we know that the next thing we're gonna do in the market is to go to the 15-minute time frame and start looking for where to enter our trade. So on the 15-minute time frame, we can see two entries, or I can see two entries right now. One of the entries being this level, but I actually use this indicator for part of my entries, and this level didn't give me a change of character on the 15 minutes. So you can see that at this level we had a change of character on the 15 minutes, and after price had this massive move to the upside, and price retraced almost immediately. So I was like, I'm going to take advantage of this, put my stop loss to right above here, take profit 1:3, somewhere here. Yeah, 1:3. Okay, so yeah, this was the trade. Basically, this was the trade. So this trade would have been an easy stop loss or an easy break even. One of those two. But my plan on this trade was to take a break even on this trade, because I was risking 2% of my account balance, of my capital, of my prop firm account. I was risking 2%, and when I risked 2%, price went up here, and price closed for the day. So the day ended up like at this very high right here. This was where the day ended, somewhere here. Day ended right here. So I was up about since 2%. I was up 4%. Is it 4%? No. I was up like more than 4%. About 5%. I was up 5%. And me being up 5%, I forgot that my daily drawdown is equity based. So um the the prop firm registered this level, this high right here, as my equity for the new day on that account. So we know that it's retraced the whole move, and I changed my stop loss to break even, not knowing that the equity based drawdown is gonna hit me out at yeah. I basically blew my account on the retracement, but not because I was losing. The reason why I blew my account was because my equity dropped more than 4%. So my maximum equity drop is 4%, and since the prop firm registered my equity for the new day at this peak being up 5%, it's dropping to break even. It's basically dropping 5%. So that equity drop is -5. So then basically I blew my equity. I blew my trade. I blew my account because of the equity stuff. I was in profits, but it just got done. I didn't know. If I knew, I'd have just closed the trade at that high, and I would be up about 3% because I was in drawdown previously. So yeah, moving on to the next one. Moving on to the next trade. The next trade for and yeah, let me just break it down for you. And basically, when I blew my account, I was very angry. I'm not really very angry, but I was actually pissed off. And I ended up closing my Euro USD trade and my gold trade. And my gold trade entry and position, I'm going to explain it right now. So yeah, let's get into it. So for this trade, we can see that we have an area of resistance right here at the top right here, and an area of support right here. This was the level that was broken. This level was the level that was broken. You can see that this level here got broken by this move, and that means our indication is from here to here. So our indication being from there to there, I entered my trade from on I entered two trades actually. So on the 15 minutes on Monday, I took a trade target from here, putting my stop loss somewhere here, I think about here. And I took over like 1:2. Then the reason why I closed this my trade at 1:2 because of the way price was moving. So price moved made this sharp movement downwards. It was very fast. So I closed my trade immediately. Not actually immediately, after some time. I just closed the trade because I knew that price was going to retrace because the structure was not looking nice at all. So the next trade I took was the next day. This was the next trade I took. Wait, let me show. Yeah, this was the next trade I took somewhere here when price was rejecting this level right here. So I took my trade here, putting my stop loss above this high right here, and putting my take profit at 1:4. Yeah, I think 1:2. Yeah, something like 1:3 actually. I mean, my entry was not as this pure, maybe somewhere here. Yeah, something like this. So my trade was 1:3, and I actually ended up taking this trade, closing this trade somewhere here. Also because I blew my account. I just closed all my trades, all my open positions, because first of all, I was up 4%. In fact, basically, I was trading with emotions because I was scared that since I've really blown that account, like nothing is just going well again. I just yeah, messed it up. What is all good is all fine. Even though I messed up on this great trade that happened today, um I'm still I'm still up 4% for the week. So let me explain this trade entry for you. I forgot to mention that part. So from this point right here, we saw that let me go to the 1 hour time frame, because basically I entered this trade on the 1 hour time frame because on the 15-minute time frame there was not much structure to go off on. So on the 1 hour time frame, on when price was at this pivot level, we can see price rejecting basically this candle right here. This is what we look for. So this candle was here and it came back here. That's basically a break and retest, or that's just up and price going up and coming down to retest. So yeah, price retested and I took the trade somewhere there. And yeah, this is just this was like the entire trade. I put my stop loss at the structural high, not a high, not not really what's it called, half the zone or the last high. Or basically, I think that was the last high. I think that was the last high as well as the structural high. So I put my stop loss at that level, take profits here, but I ended up taking my profits at 1:2 because of I blew one of my accounts, and honestly it was not even a bad trade. I blew the account. So just what's it called? So this is equity drawdown. Price just came back to break even. Just imagine. So for this trade, I would have closed at break even. So I'm gonna count this one as a 0, like a break even trade normally. And this trade I got 1:2 on it, and also on Euro USD I got to 1:2 on it. So basically on Euro USD you would have put, if you had a better stop loss, you would have had this whole move. Also on gold you would have had this whole move as well. I would have had this whole move, but yeah, so good, is all clean. Still a good week, man. So account updates for my problem accounts. I have let me check it. I think I've meant to have 5K accounts and 2 25K accounts. So basically, I blew 25K accounts and I blew about 4 5K accounts. Meant to be only 3, but I lost one in profit, so that one is going as well. So basically, this prop firms were currently up about 6%, remaining 2% to pass. So 2% and like some change to pass the account. And on my 5K funded account, I am currently up $35. Yeah, I'm currently up $35, and on this funded account, my aim is just to make withdrawals. I'm already due for some withdrawals, just to like maybe catch a 1:3, risking $50, 150, make a withdrawal. Then I'm gonna reset it again, waiting for the next trade. So yeah, that's just the account updates. I'm also going to do a review of all the trades that made me blow my account. That made me blow my account. This 25K account. It was a very unfortunate trade. Yeah, is it this one? Yeah, so this trade, this account, this should be 25K account. It should be DAX. Let me see if it. Okay, yeah. This should be the 20. This is the 25K account. I'm gonna do a review of all the trades that made me lose this account, and then I'm gonna also do a review of the 3 trades, the 3 5K accounts I blew as well. I'm gonna do a review of all the trades. But for the one I blew in profits with the US30 trade, this trade, I'm not gonna do a review on it because, like I've just done a review on it, it's meant to be at least break even. Like the account is not meant to go. I just messed up. I didn't really remember that equity based drawdown stuff, and yeah, the account is gone. But I have one funded account and I have one 25K account up 6%, remaining 2% to pass. Next week maybe we can get 2%, maybe not. Hopefully not very, very bad drawdown again. But yeah, it's all good, it's all going good. And also for ICC updates in general, but on my journal, I've taken about I think 85 ICC setups this year. Yes, if I pull up my calculator, ICC setups. So this year I've taken about this is the 6th month, right? Basically, this is the 6th month. So I'm gonna do 5. This week I took 3 trades. So let's say 82 setups divided by 5 months. So I've had 16.4 trades, 16 trades per week, basically. So I mean, it's all good. Let me just show you guys my journal, my trading journal. Yeah, trade table. So give it a second. Yeah. So currently it's showing 78, but it's more than that. I've not joined on this week's trade, and I think that some trades from last week. Because I was on vacation. I've been a bit busy. This is the final week of university. This is like the week before exams, and yeah, it's a bit stressful. I'm a bit occupied. So yeah, basically, and also one last thing, I'm gonna be buying some new accounts. I think of buying. I'm thinking of buying two 25K accounts and about three 5K accounts. But if I don't have the money for that, I'm gonna buy one 25K account and three 5K accounts. Again, so this month we're gonna go hard. We're gonna go big. Yeah, this time I'm gonna use all my savings to try to buy those accounts, and yeah, we're gonna also work hard this month. Basically, when I'm trading ICC, when I'm trading ICC, every day is just like helping me grow, like get better in ICC. Like every trade I take, I know like what is making this trade lose. Like how I put it, like every trade I place is like a refinement. It just gets better and better and better. Like from every from my first trade and where I am now, like a big improvement. There are trades that I can now see, that just patterns I can see, that I know when a pair is gonna rise, when it's gonna fall, stuff like that. Not really all pairs though. Maybe the pairs I trade, like Euro USD, USDT, and maybe gold. You know, I get accustomed to these pairs. I know how they move, and they basically not really predictable. But when I see my system, it's more easy for me to take advantage of it, basically. So yeah, so good. I'm gonna by next week I'm gonna buy those accounts. Yeah, I'm not gonna be doing my speed run challenge again, because first of all I'm funded, and also because I think it's doing more damage than good. Trying to rush my accounts is not really a good thing. I'm gonna do the reviews of those trades I failed, those accounts I blew. Sorry, about three 5K accounts and one 25K. I'm gonna do the review and post it on YouTube. I'm gonna learn some things before I buy those new accounts, so I don't repeat the same mistake. And also for this 5K account I do, I'm gonna try to not repeat the same mistake again. So guys, that's the end of this video. See you guys next week. Peace out.
Those J's get 10 of them. If I get me a chain, could I call it a flex? Or am I enslaved all over again? Money might get respect, but feds still wanna stop me in a Benz. Being black in the West is a crazy complex. It's complicated. Granddad thought there was gold in the pavements, but as I go, they're taking. Now I'm here for the taking. Any door I'll see, I'll break it. Can't wait till the days I chat to.